Mac futures this morning indicating a gain at the start of trading this morning. We're at the highs of the morning right now with the Dow Industrials up 74, the S&P up 8, and the Nasdaq higher by 33. We hit several record highs this week, but all three major indices pulled back from uncharted territory. Record highs yesterday with the Dow down 243 and the Nasdaq and S&P down by 18 yesterday. Nvidia is up this morning, and that is part of the lift on the broader averages this morning. It's at another all-time high right now. The Trump administration reportedly approved several $billion worth of Nvidia chips to export to the United Arab Emirates. We're also watching Argentina. Treasury Secretary Scott Bessent offering a financial lifeline, finalizing a $20 billion currency swap framework with its central bank to help stabilize markets. The secretary told me weeks ago that the U.S. would not allow Argentina to fail. I want to get your take on Argentina because, Mr. Secretary, Argentina's peso sliding, politics and capital outflows rattling investors there. Javier Milei, I guess, has lost the confidence of investors. They're pulling their money out of Argentina. You say all options are on the table, from swap lines to direct currency support. What's the plan in terms of supporting Argentina?
The plan is, as long as President Malay continues with his strong economic policies to help him, to bridge him to the election, I call this the screens moving to the streets. We are not going to let a disequilibrium in the market cause his a backup in his substantial economic reforms. I don't think the market has lost confidence in him. I think the market is looking in the rearview mirror and is looking at decades, if not a century, of terrible Argentinian mismanagement. It's very hard to believe that it is different this time, but I believe with President Malay, it is.
And President Malay will be at the White House next week. Joining me now is Heritage Foundation Chief Economist and the Unleash Prosperity Senior Fellow, EJ Antoni. EJ, great to see you. Thank you so much for being here this morning. Let me get your thoughts on Argentina first and why it is that the U.S. will not allow Argentina to fail.
Well, Maria, thank you for having me. Argentina is obviously a great ally, and so is Malay. But the other thing I think it's really important here, and that should give us confidence, both as American citizens and also as investors regarding Argentina, is the fact that our Treasury Secretary, Scott Bessent, is the one who's masterminding all of these actions here. He is an absolute master of sovereign debt markets. He has his finger on the pulse of not just U.S. Treasuries, but bonds around the world. This is the man who broke the Bank of England, let's recall. So if he is willing to put his, to essentially put his imprimatur on this and to say that this is a good deal for America, that we are getting these Argentinian assets, for example, at a steal, and I think everyone else should believe him.
Yeah. EJ, let me get your take on the lack of data here. Of course, we know that given the government shutdown, we did not get the jobs numbers. We're trying to understand what's going on in this economy with the lack of data because of the government shutdown. Is there any other way, from your standpoint, to get a good capture of what's going on in the economy without this data from the Bureau of Labor Statistics?
Well, Maria, one of the things that unfortunately we've really had to struggle with in recent years, and including in this year, has been the inaccuracy of those different government reports. And I think markets have really caught on to that, to the point where we've seen several major data releases this year that markets essentially just sloughed off. It was as if the numbers weren't released at all, because when the numbers are so unreliable, that's essentially what happens. That's the inevitable reaction. And so we're increasingly looking to private sector sources, whether that's private payroll processing companies like Paychex or like ADP, or we're looking to different private sector inflation indicators, whether that's Trueflation or the Big Mac Index. I believe the Economist magazine even publishes that one. So again, the private sector here is increasingly coming up with solutions for public sector failures.
All right, so based on your knowledge of this data right now, based on your access to private data, how would you assess the jobs market? How would you assess the macro story today?
Maria, it's a great question, and I think the best word that describes it is transitioning. In other words, we are moving away from over-reliance on government. We are reprivatizing the economy. That's the phrase that Treasury Secretary Scott Bessent has used before. We're very likely going to see over 100,000 federal employees let go this year. Obviously, that drags down your headline jobs number, but it's actually good for the overall economy because you are moving resources out of the unproductive public sector and putting them back into the productive private sector. And we're seeing this when we look at, for example, the 12 regional Federal Reserve Bank surveys that they do for manufacturing and non-manufacturing sectors. We're seeing moderation of inflation. That's a great sign as well. And as we continue to get more and more trade deals and as the tariff war dies down, I anticipate we're going to see more progress on the inflation front. At the same time, the job growth comes back in spades. And again, it's not just job growth in government, it's going to be job growth in the productive private sector. So that's very, very bullish.
So do you think then the president should, in fact, use this as an opportunity to cut government, get it even smaller, and announce layoffs?
I think the president needs to use all the tools at his disposal in order to get his agenda across the finish line, because the opposition in D.C., whether you want to call it the Democrats or the deep state, whatever, the opposition has been throwing every roadblock up they possibly can, legal or otherwise. And so, again, whatever tools, Maria, he has at his disposal, he ought to use them, because the American people want this agenda. I mean, think about it. They gave him not just the big electoral college win, the popular vote, every swing state. He has a mandate.
What do you want to say about the Fed then and interest rates? Yields this morning are on the move. New York Fed President John Williams said that a weakening labor market could push him to support further rate cuts this year. We had the September Fed minutes showing a split on whether we're going to see 2 or 3 rate cuts coming. The yield on the 10-year is now down 4 basis points. Economists are warning that the government shutdown could impact Fed policy as well because of the delay of this economic data, like we just discussed. But the government is also ordering some furloughed employees back to publish the September Consumer Price Index, which is supposed to be out next week.
Right. And again, Maria, unfortunately, so much of this data has become so unreliable that the Fed, along with the private sector, investment banks, commercial banks, they've been having to look elsewhere. In fact, the banking sector back in 2022, towards the end of the year, was calling out how unreliable post-pandemic data had become. So this is by no means a new phenomenon. And I think all these different market actors have come up with new ways to essentially reevaluate data without having to rely on, again, these unreliable statistics produced by the government.
All right, EJ, great to catch up. Thanks very much. EJ Antoni joining us this morning.